All right, welcome back YouTube for another market analysis for the London session. We're going to go over again S&P 500, gold, and oil for you guys. And again, next week we'll probably add in NASDAQ for you guys as well. Right now we have a 10 tick up here for S&P 500. So we're going to go over some levels we're probably going to be looking to trade during the London session and some trade ideas, what we're looking for as the market pulls into these levels. So we can see S&P 500 on the way up right now. And I'm pretty sure we'll probably gradually climb higher. I pointed out a resistance right here at about 81 to 83.75, 84. But we are above that as of right now. Current market has pushed into 85.50, 86 even, right around there. So I think we're probably still going to keep climbing on S&P 500, maybe even hit the 90s, and then maybe come back down. But as of right now, don't really have a trade on that one. Did take a trade on gold. I'll show you guys that later on when we get into it. But S&P 500, what we're really looking for is to see whether we can get a pullback for a couple rotations for support right off these 83 to 84s. Or if we can't, let the market come back down below 83 and then start to give us some rotations for resistance to take that back down, right? So S&P 500 again, though, you are still in a bullish trend. So understanding that you're still in an uptrend, it's better to try to trade with the actual trend direction versus try to go against it. And it will definitely feel a little bit risky if you're continuing to go against it. But you guys can see we're still in that uptrend. And if we zoom out a little bit more, you guys can see pretty clear uptrend as well over there. So that's what we're looking at right now. I would, again, it's probably going to look something like this where we break up and then we'll want to see it pull back. If we can hold that support right here with a few rotations bouncing off 83 to 84, then we'll go ahead and look for a short long opportunity for buy the dips. But if we pull back below 80, maybe 83, maybe around 81 to 83, and then we use that as resistance, then we can look to short it back down into about 72 to 75. And then if we can break that level, we have a pretty decent space coming down into about 60. So that's what we're looking for right now on the S&P 500 10 tick. We're going to go ahead and take a look at a 4 tick too to see what we could have as far as like smaller moves. But yep, that's what we'd be looking for on the S&P 500. Either we're going to try to take some buy the dip opportunities to go long to the upside, or we're going to try to fade that back down to the levels of support and then look for some buy the dip opportunities into the actual trend direction. So let's take a look at a 4 tick real quick with you guys so you guys can see what it kind of looks like. So you guys can see we got some moves to the upside. I'll show you guys why we have that move to the upside. Taking a look at structure on this thing, if I zoom back just a little bit, these are the same levels that I drew on the 10 tick. They were just transferred over here to that 4 tick, make it a little bit easier for you guys to see. But we had a strong resistance here between 81 to 83 or 84. We peaked out right over here once. We tried to again right over here, but it failed right there at that level there. And then we gradually came back up and we couldn't break that level as well from today. So we held some resistance, and finally the markets found that support coming up higher, and we moved up from there, right? So yesterday, some of the team caught a really good opportunity short, so very proud of them. They saw it. I didn't really recognize it until afterwards, but they did a good job at seeing that opportunity to go short. So we had a support here, but the market was below that level, and then it was rotating right at that level during the London session, and they caught a really good opportunity to the downside. Markets dipped all the way past that level of support that we had prior, and then gradually climbed back up above for today's session. So during today's session, the US session, we did have a couple opportunities to bounce, 1, 2, and then from there we gradually pulled up. What we want to see for more long opportunities was to hold between 72 to 75 as some support, and from there we're going to try to analyze or at least see the market for S&P 500 take its move to the upside. Now if we can't break past these 85 to 86s, maybe into 90s, and we come back down again, that will give us another opportunity to either look to buy a dip or come back down to these supports around 72 to 75, and below that, which is 60. So taking a look at that structure, guys, you guys see if you scrunch it up just a little bit, you guys can see the gradual move to the upside. So what was once resistance came back down, found its support. I wonder if I can zoom out now. I can't zoom out anymore. So came back down, found some support, came back up, used that resistance as support, tried to push higher, couldn't, came all the way back down to the same level of support or around that same area right here, and then gradually pulled from there to try to break the resistances above. And finally, we are back above these resistances, using that as support to try to press up higher. So more than likely, we'll see more climb on the S&P 500, maybe in tonight's session, during the London session, and if not, then potentially even into the US session. But we'll just kind of wait. What we are going to do is patiently wait out to see how the market reacts, or the price action of the market at these specific levels, and then we're going to look to qualify a actual trade based off of our strategy around market structure. So that's what we got so far on S&P 500. Let's take a look at gold. I'll explain my trade that we took on gold, but let's take a quick look at gold. We have some levels that we've got plotted here. I'm going to move this up just a little bit for you guys. So we have a strong resistance coming in between 80.4 to about 81.6. Good level of resistance. You can see we failed that level once, failed that level twice, 3 times, 4 times, and right around here is actually where we actually look to take our trade short. And the reason why we're going short is because we have failed that level so many times already on this one. So 1, 2, 3. Ideally, if I wanted to see a move higher, we'd have to come back. We'd have to come up above 81, push that level, and then come and rotate right at this level with support, right? So we would want to see some rotations on top of that level. And because we didn't, because we failed that, we're looking for the price to come right back into 76, which is actually where we're at already, right? So our trade got taken out with some profit already. I had 2 lots short, so dropped it down from 80 down into about 76.9 is where we took our profit off that level, and we're gradually moving down right now. So a pretty good trade that we had. Now we're just waiting it out to see if this is going to hold as some support. If it doesn't, what's going to happen is you're going to see a gradual try to pull right back into here, use it as resistance, and with those rotations from here, you're probably going to see more of a collapse down into 72 to 73. So that's kind of what we're waiting out for. Market has come into our level of support right now, and within this sideways motion, we're going to try to see if we can get some rotations to hold the support. If we do, then we'll see a potential climb back into 82, and maybe even a push higher into our next levels, which are probably going to be somewhere right around here. All right, so let's just maybe say 84 to as high as maybe 85. So that's where we would look for the upside. If not, we're going to see some gradual pulls down into prior levels of support. So you can see when we scrunch up this chart as well, you guys can see what was once resistance is acting as support. Once we break it, it will use the same thing, right? So if I extend this drawing to the left, you can see how that was resistance here and became the actual support right over here. So this will more than likely can be a potential area for some support too, right? If we wanted to do any underneath levels, it's going to probably be something like this here. 65.6 is going to be your next level of support if you can break that 72 to 73 on that downside move. And then underneath, you're definitely probably going to see a little bit more coming in at about 56.4. So that's our longer term chart, or we can see a bigger picture. We had our move already. I'll show you guys here on this 4 tick what it looks like, but again, we're probably going to look for some bounce right here at 76 to 77. We can get some rotations in this mid-level. We might end up looking to qualify a trade, but it depends on how we look during the London session. Really try to trade these levels based off of the rotations and everything. So we'll see what happens. Let's take a look at the 4 tick, give you guys a better idea of what we're looking at. Here you can see the same levels, some really good ideas of what it looked like, especially on rotations. I'm going to erase this here, but you can see 1, 2 failed and came back in. This actually gave a lot of opportunity to downside. Only problem was I wasn't in the markets at this time. to trade it. So you had 1, 2, 3, 4, 5 times right in this resistance area. And I think this is so 1, 2, 3, 4, 5, 6, and a seventh right at this resistance area to drop all the way back down. Now it couldn't push below, but it couldn't break up above either, right? So when you see something like this and it's not breaking above the actual resistance level and holding it, right? So ideally, if it bounced from this level right here, right, and we wanted to see a move, we would want to see it break above and then start to use this level as some support for a buy a dip opportunity to the upside. But we didn't see that. What we saw was a failure right at this level. Actually, let me get these arrows off. What we saw was basically a failure right at this level of resistance again, and it really couldn't break above to make a new high. So with that in mind, with these failures here, and also here, this starts to create a great opportunity to look to go short, right? Just because we had a slight V bottom right here to come right back up doesn't mean anything, because we're still failing that resistance. We're still not breaking up above it, right? So that's actually why we were actually looking for a move down from this area to short right into that support, because we were actually showing resistance and rotations right at our level we want to see. So this would have been a great opportunity to trade more lots, but I only got 2 filled for a short side move. So we're looking for some support right in here. You guys can see a slight gap. If we break below this level, then we'll move right into where the gap was, and right into the actual impulse right there. So you guys see that right there. So that's what we would look at. And then on the downside, again, we'd be looking at some levels like right around here, right between 66 to 68, and then down below 64, and so on and so forth. But that's what we're looking at so far on gold. And we're going to try to play those levels out if we can during the actual London session, see if we get any trade opportunities there. Sometimes the London session is slow, sometimes it's moving quickly, just kind of depends. It's better if it has some news. That means that the markets are going to be moving in the direction quicker, right? Because news drives the directional move a lot faster. So, but this market structure, just kind of following it, you guys can see zooming out of this thing, we're still, if we can hold these levels, we can still potentially try to test that upside there too. So that's what we'll be looking at right now on gold. Let's take a look at oil, review this chart with you guys as well. All right, guys, so we have a resistance here, 51.71 to 51.92 is our top side. Really, mainly because that's 51.92 is the top point in which we tried to peak at, and then we failed to break above that level once, twice, and again we are trying these areas again right here. So what I would want to see ideally is oil to come back into 51.70 to 80, right around there for me, to look to try to take a short back into the support. I would say I'm not really too keen in trying to go long just yet, given the way that we're rotating, but I do think that we may have a move or an opportunity back down. But it depends on what we're looking at on a smaller term too. That's where we can gauge some of the rotations. But as of right now, if we can get back up into that resistance of 51.71 to 51.92, that's going to be our battle zone to look to try to take some short opportunities from there. Right, so if we can get those rotations, we'll go ahead and qualify a trade opportunity there to the downside back into support. And then zooming out of this, you guys probably see another level of support coming in, maybe somewhere right around here. Let's draw it for you guys. Extend the rectangle. Okay, probably looking at another level of support coming in somewhere right around here. All right, so we'll see if we can get that opportunity to break through this level of about 51. And if we can, we'll definitely see some downside into about 49.93 to 49.69. But as of right now, we'll probably try to play this range of motion. And if we can get some opportunities to short or go long, that's kind of what we'll play out for now. Looking at this, it might be a little bit better to try to take the long opportunities from these levels, but only if it comes in and holds that level of support. If it doesn't, then it's not going to make any sense for you guys to try to take any longs in between, even in this like area right here, because it could still be a little bit risky. So I would say just kind of stick to those levels. You guys are looking to trade, you might find that it's easier to do that and forces you to be more patient, right? Instead of impulsively trying to get into a trade that you're just not comfortable with. Now let's take a look at 4-tick, get a better idea. Same levels are going to be up from that 10-tick there. And again, we are filling this area right here. So we have still found some slight support coming in. So right in this area, right there. So that's like literally right in the middle of the range. I would say be cautious if you're trying to trade any of this. Yes, it could hold as some support and could pull all the way back up, but it's just a little bit riskier to try to play right in between that area. That being said, it's because it's an actual value area, right? So if I were to throw up that study there, you guys could see how that actually becomes a really, really choppy area for people, right? There's a lot of people trading right in this here. That's the point of control, meaning that was a magnet to pull price into, and it may potentially again come up into these areas. So you guys can see a value area high right here, high volume node right here, and then thinning of the volume is going to come right where we have our resistance at with overnight high. So the levels kind of play into the market structure as we see it, right? Pivot levels are great to look at as well, because they're going to be exactly what other professional traders are using as well or looking at. So they're going to be good areas to try to identify or to take some lots to short or to go long. It's kind of depending on how you're looking at it. But I would say trying to trade right in this area, it's going to be a little bit choppy and a little bit of a trade that gets you on the edge of your seat and makes you feel like it's a riskier trade. So I would say even the moving averages, if you look at them, are just kind of in between. And this type of stuff, when you're trying to follow moving averages, you want to see it move in an actual directional trend, not within the market kind of moving sideways and in between the actual candlesticks. You want to see it moving in a directional downward trend or upward trend. Yeah. So I would say just keep that in mind. We'll wait patiently, see if we can get some trades off this levels of resistance, and if we can, we'll take those shorts. And if we get some opportunities to the downside, you guys can see it lines up almost perfectly. Our levels line up almost perfectly with like your previous day low. There is an overnight low which we could actually probably press into if we get enough strength to push that down. But I would say if we're going to try to short, target levels are going to be the mid-level to take some profit, 51.33, seeing that it's finding some struggle to go down, and then right around this bottom area we're going to try to take some profit around 51 to maybe even as low as 50.80. All right, so that's probably what we're going to be looking at as well on oil. But that is our market analysis for the London session, guys. I appreciate you all watching the videos here. If you guys do like it, hit the like button, subscribe. If you guys have any questions, feel free to pop in and contact us at TRADEPRO Academy.